Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the green across the crypto board here. And, we should note the sharp contrast with the stock market, which is bright red today. So, a little bit of a mixed perspective. Part of that may be the confusion about, are we in stagflation? Are we in inflation? Are we in recession? What's going on? What do all these economic numbers mean as different parts of the economy respond differently? And here we see the ADP actually giving an employment report of well above the expectation for job increases. 235,000 positions opened versus the 153,000 expected, and the 127,000 in the previous measurement. So that's considerably higher. Now, was that perhaps seasonal due to the holidays? Maybe, but we do have to watch that because the Fed may indicate that that's still the economy being overheated. And of course, we know what could happen then is that they might increase interest rates again. And that could be a reason why stocks could be pulling back a bit. Now, guys, we do see initial jobless claims of 204,000 versus the expectation of 223,000. So, and also that was the same measurement previously, 223,000. This is a fairly good, report basically, where jobless claims have dropped. Now, are people dropping out of, just even applying for claims? Or, are they going back to work? Is that what's going on? That's what the ADP suggests, right? And so we do just continue to watch these numbers. You can't really look at just one point, especially in kind of a holiday season. It can skew the job numbers a bit. But we do see that continuing jobless claims are pretty much equal to the previous measurement of 172 million versus the 1.69 million. And, it's just a little bit lower. So again, is that seasonal or what? Not sure, but the economy may be still a bit hot. Okay, the trade deficit is going down. However, that does suggest a bit of cooling. And U.S. services PMI is actually increased, but I would say this is nominal. It's not like a half a digit or anything. It's just a couple. So guys, I think I'm going to move on from this. We're basically in this stagflationary era where it's going to be confusing for a while, and the market still needs probably another quarter, another 2 quarters to figure out where everything stands. Now, for a little bit of a truth in advertising, I do want to review what I was saying 2 days ago for the Bitcoin chart. And guys, very few people watch that. I had about over 100 people watching the previous video or whatnot, but only 39 people watching this one. And yet, it really gave you the key to the market. And here, just for proof and transparency, I want to show you exactly what I said, and then we can look at what happened on the charts. And again, this was 2 days in advance, right? Which is that we could still be in a squeeze. And now this squeeze on the 2 day can actually take us all the way up here to around 16,900, 17,000. A lot of people are targeting 17,200, 17,300, but that would actually take us above. Okay, so basically, I'm saying a lot of people keep talking about 17,200, and there's good reason for that down the line. But what I was saying is 17,000 might be the limitation on the move that we should expect. And so that's what would have been tradable for me. Now, let's go ahead and just jump to the charts and see what happened. When I made that video, we were down here at 16,700, approximately where we are. And, it's important to know how far, something might pump because it may also retrace. And so that's very critical for your trade. So let's go ahead and see what actually happened. Well, lo and behold, if we mark out where this wick pumped up to, and we can go to the daily for this, then we do see that coming off of that squeeze that I was talking about, we actually hit 16,900 and something like 85, right? So essentially right there at that 17,000 that I was suggesting. And then later in the video, I did suggest that there would be the potential for pullbacks. And if we go ahead and just take a look at the episode again, you can see that we really wouldn't have lost the momentum that I set up for us unless we had crossed below 16,670, and we would hold our momentum to the upside as long as we were above 16,670 there. So, basically, we haven't done anything wrong by pulling back the way that we did. We hit our target, and then we're coming back and testing, the support that we're trying to carve out here. This is bullish behavior, guys. I'm seeing a lot of people freaking out. They're thinking we're going to dump to hell. They're seeing what's going on in the stock market. And I'm telling you that unless we violate the alpha momentum pools, unless we violate my key thresholds, we aren't breaking any type of structure. And you guys get the alpha, okay? Like, I know that I'm not the most exciting YouTuber or anything, but the levels that I'm setting out here absolutely work, and the alpha fam is just absolutely killing it. Guys, we nailed this move almost to the penny, and a lot of people are just freaking out. They're losing their minds over the stock market going up, the dollar, the stock market going down, the dollar going up, retracements, blah, blah, blah. I'm going to show you my new levels for the daily, which of course will be closing tomorrow afternoon. And then we're also going to have a 2-day close, and we're going to have a 3-day close as well. So I'll show you all of those. Here's the daily. So for the daily, of course, we are above our volatility pivot, and that's good because if there's any change in volatility where we do have a volatility spike, then we are well positioned to continue to the upside, at least on the daily, okay? For the next day, I'm not worried, okay? And usually that carries over a couple days. So unless price action drops to hell, or does something very weird, then usually you get like a couple days out of that type of thing. And so, for the daily, and again, like if you're on the 4-hour chart, it could take a couple 4-hour candles to play out a move, right? You're on the daily chart, it could take a couple days for the daily patterns to play out, right? You're on the weekly chart, it may take a few weeks for the pattern to play out. So, again, on the daily, we're looking pretty good. We're above our general continuation line. We haven't broken this critical additive and subtractive level where we will lose a ton of momentum, and could orient us to the downside if we cross that line. So we are just swimming around in the alpha momentum pool after a nice pump exactly to that level that the alpha fam was calling for. And the one thing that we're missing here on the daily, and this is because we're having a pullback after this massive pump, um, is that we did lose our current hold on momentum, right? And that makes sense because we reached our target and are pulling back. So what does that tell you? That really our goal here is to stay above 16,691 on the daily, and really try not to get below 16,655. You put a couple daily candles under there and you're going to start breaking this structure. And again, anything over 16,590, should there be a volatility shift, something just changes the dynamics of the market, then our momentum, even though currently we're pointed down a little bit, losing a little bit of momentum, we are still going to have a bias to the upside. And of course, you can see this nice bullish structure here as well, according to the candle closes. So a little bit of a double bottom, a little bit of a higher low, a little bit of a lower time frame, higher lows. And so this is looking okay, even though in the context of the big picture, this is a macro downtrend still, and we are just making lower highs. At least on the daily, we're still good, fam. Okay, so just to pay attention to these levels. for the daily. Now let's jump ahead over to the 2-day, because the 2-day is going to give us a little bit of a different picture. Now again, the benefit of the 2-day is you get a little bit more flexibility. There's a little bit more room built into the chart. Okay, so if things don't go well on the daily, well, we can fall back on, well, where did we close on the 2-day, and we could suggest that maybe within the next 2 days, right, or the next couple sets of 2 days, that maybe it could repair itself. And so let's just take a look at the 2-day here. Let me jump over to the 2-day chart just so we can see the candles. And same kind of deal, right? We have this bullish divergence here, which is a little bit different than the daily or the 3-day. But on the 2-day, we had this bullish divergence, which really is what gave us that pop and was the play that I was looking for. Again, if we go back to the transparency video that I was mentioning to you, just so I can be as forthright as possible about the calls that we're giving here at Alpha Commission, which many YouTubers, many Twitter people, many gurus or whatever, they don't go back and review what they did. Almost every episode, almost every other episode, I'm reviewing what we did, just to show that this is a reliable strategy. And again, I was using the 2-day for a reason. We were building up bullish, divergence on that chart, which again gave me the confidence to suggest this potential play to 17,000, where we did have a volatility limit on the 2-day. But hey, Alpha Fam, check this out. Our volatility limit is now below us. The volatility pivot is below us. So we got ping ponged, right? Like I suggested in the last video, from 17,000 back down. But now we have a volatility pivot at 16,705. So as long as the 2-day chart, it can dip below it, but as long as it gets back above that volatility pivot of 16,705, then we can consider, in the next couple days, that our bias, just like on the daily, will be biased to the upside. And this is giving us a stronger picture for the potential upside in this market. And it's something that a lot of analysts are missing because they don't know how to analyze momentum or volatility. Okay, so you guys are getting the inside scoop there. And again, that critical level for the 2 days, 16,705, those tend to be pretty big plays. So pay attention to that number, Alpha Fam. And then, of course, the most important number under that, because again, like we're having a pullback, so of course, we're losing our, previous pump momentum, but we're still in a good zone. And if you want to hold on to that good zone, then we do have to maintain above 16,601. Okay, that's what we really don't want to violate. And then we're going to break our general continuation in just in the general kind of a momentum sense underneath 16,467, suggesting that $16,500 area is still really important on almost all of the time frames. Okay, and if you do want to reclaim your momentum, we are going to try to look for 16,844 just to just start driving back up. We get a couple 4-hour candles above 16,844. It's going to start looking good, especially if we have a daily candle there, because we are using the 2-day time frame. Let's go ahead and jump over to the 3-day, because the 3-day will also be closing. And for the 3-day, let's just do a quick comparison with the 2-day here. You do see that the 3-day is giving us one of those setups that we had previously between the daily and the 2-day, which is to say that the 3-day is suggesting there may be a limit up here that we may bump our head on, and lo and behold, it's that $17,200 area. So this could be the goal that those other YouTubers, that those other gurus, that those other kind of Twitter guys and everything, they're trying to look for through this play. And it's not that they're wrong, it's just they don't know how to control or analyze, the daily movement or even any time frames movement. They just are targeting one area because of liquidity or whatnot. And, I'm showing you how we can control these things. It's a world of difference. I'm starting to get good at this stuff, guys. So I am quite proud of myself. I am patting myself on my back because, just 2 years ago, I was very confused about my strategy, okay? And it's very easy to lose money if you're confused, but if you can control, the chart, if you understand your levels and what you're trying to do, then it's like you're looking into the matrix and you understand what all the numbers and dots and stuff mean, right? So guys, let's go ahead and switch to the 3-day, take off this comparison with the 2-day, and now we're looking at just the 3-day chart analysis. And one thing right here that is pretty critical is that the 3-day does suggest that in order to hold this blue candle right to the upside, we do need to stay above 16,670. In fact, you can see how we basically have just pumped off of that alpha momentum pool that I have right here, this really thin kind of pool. And this is the thinnest out of all of the time frames. It really does suggest that there's a very narrow window between success and failure on this 3-day chart. But the good news is we are well above it. Okay, so we have plenty of space to fall back on, and we are above both of my key momentum levels. Okay, and for general continuation, anything above 16,273, giving us even more buffer room than the 2-day or the daily, will still be looking fairly okay by the 3-day chart. Yes, we may have to retest our lows, but we're still going to be in a pretty good place. Now, the problem with the 3-day is the same problem that the 2-day had, 2 days ago, which is that there is a volatility limit here. So if we do get a change in volatility, something in the market changes the volatility structure, then we are going to be potentially shot to the downside fairly hard, and that's where we could start exploring these lower levels. But until then, we probably are going to be searching for that volatility pivot level around 17,200-ish, where we might meet a rejection, probably because this 200 EMA, I mean, I shouldn't say because of the EMA represents price action, but anyway, we can just, kind of confuse the chicken and the egg just a little bit for simplification. Let's just say that you can see that the 20 EMA on the 3-day is crashing down pretty strongly. And so what happens when you run into a almost vertical EMA? Pop, you get popped back down, right? So that's what happened on the 2-day, and now it's the 3 days turn to do that. I hope this makes sense for you guys. I'm trying to explain it in ways that make sense and can be helpful. And so if we do bump our head here, just look for a possible pullback, and as long as we hold these levels of 16,670, 16,635, and we should be still pretty good. Okay, we're still going to be pretty good to go. Now, what's this volatility that I'm talking about? Well, let's go ahead and take a look at volatility for the 3-day. Holy moly, it's just on the floor, ready to explode. Let's just pop over to the 2-day and look at what the 2-day chart is saying. Same thing, on the floor, ready to explode. It doesn't mean it's going to go to the upside. Volatility is direction neutral, but it does suggest that it wants to explode one way or another. And let's go to the daily, and again, we should see some pretty low volatility, which would like to just expand either price action to the upside or price action to the downside, depending on which side of those volatility pivots we're on. And since we are above the volatility pivot on the daily and we are above the volatility pivot on the 2-day, if we can get through this 3-day cycle and just do basically what we did with the 2-day previously, where we just bump our head on the pivot, come back down, bullishly retest, then the volatility pivot for the 3-day should come underneath our feet, and then that would give us the chance to explode, with the daily, the 2-day, the 3-day at our backs. And of course, we're still waiting for the day that the 5-day and the weekly will close, and that will come up. So we're not really having much to say about them compared to what I already said in a very detailed episode a couple days ago. But for the meanwhile, whatever's the daily, the 2-day, and the 3-day are closing tomorrow, and so those are what we're paying attention to. All right, guys, I am going to wrap it up there. I guess I'll make probably a separate episode for some of the altcoins. I think people respond better if it's an episode just about that coin. Seems to me that that's what the audience likes. You can suggest a coin you'd like me to review. I have been trading a really pathetic kind of S coin called Bonk. Just some really degenerate play. We've been getting like 400% returns in the last 2 days. We got 20,000% returns since the creation of that coin. Of course, I wasn't in on it at the beginning, but I was in on it since that 400%. And so it's just been a very interesting time as price action on the Bitcoin chart is largely going sideways, as stocks are largely being repressed, as the dollar has essentially been breaking to the upside out of that downtrend that it is has been in. And we do see that we're now squeezing to the upside, so that will continue to repress the market. If we do bump our head somewhere around 107, 108, then perhaps that's going to give Bitcoin and some of the stock market and some of these assets a chance to really run. But you do see that we skirted off the top of this level that I've had marked out for like months, right? And so we basically have just bounced off that key level that I had marked there. And I would expect us to perhaps continue to squeeze, anywhere to 105 to 108, and hopefully that we stop, in that area and come back down. Otherwise, it's going to, if we push up into this 109, or dare we push even higher, it's just going to be very horrible times for the market. But since the dollar does seem to have pretty much topped out, as the other Federal Reserves, not the US Federal Reserve, but as the other Federal Reserves in the world have kind of pushed back and started to defend their own currencies, the US dollar isn't doing its own thing anymore. And so there should be an upper limit to this. So what I expect is whatever the squeeze ends up being, wherever it ends up getting squeezed to, and that's macroeconomics, that's high level politicians and economists like doing stuff to the market. Okay, it's not anything that you or me can control. It's not your fault, guys. Okay, this thing is controlled by governments, and as that thing pumps, we are going to be repressed. And I do think it'll reach a limit, however, and it's going to pull back down, and then we're going to get the run that people really want to look for, some type of a bear market rally. Guys, definitely going to end it there. That was your alpha for the day. Stay safe and happy trading.